boys, we're back with another video, and today we're just going to get straight into it. Failed breaker structure example, and this is coming straight from the mind. It's not coming from anywhere else. So I'm not reading off a script, I'm not looking at paper or anything. Straight from the mind, straight knowledge. So let's get straight into it. Example of a failed breaker structure, nice and raw. We're raw dogging it today. So 30-minute breaker structure over here, of course. With this, we get a new high, right? Obviously, there's a protected low as well. The lowest point in structure before putting in a new high. So obviously, we get that 30-minute new high. Order flow is still bullish. We're still putting in new highs, and we're still respecting demand. So as long as we're respecting demand and we're putting in new highs, order flow is bullish. If we're respecting supply and putting in new lows, order flow is bearish, right? So the contrast between the two. This is a failed break structure. It was a regular break of structure beforehand. Don't get me wrong, right? So obviously it would have been a new low being put in over here, right? Because price came in, tapped in lower, right? So we put in a new low here. But because we respect a demand from our original structure break, and we confirm off of that demand zone, that could be with 1 second, 3 second, 5 second, 15 second confirmation, or a rejection candle confirmation, whatever your confirmation is. As long as we get that on this demand over here, then that's when it becomes a failed break structure, because the structure that's failed becomes inducement, becomes liquidity for that demand zone below. And you guys can clearly see it here. We refined this demand POI, so we refined it. If we use the whole candle over here, it wouldn't have worked with the inducement, right? So that's why we collect data on different demand zones and supply zones with refinements and different criteria, because we can see what works well for us. And I know this refinement works well because I'm refining from the body lower. Any refinements from the body lower usually works well for me because it's unmitigated, right? It's the unmitigated portion of the candle. So as soon as we confirm off this demand POI over here, then we can put in the failed breaker structure, and we can see that the lows of the failed breaker structure became liquidity for the demand zone below. So there was a sweep, we tap into the original demand, and this demand is high probability for me as well because it is an engulfing candle. So as long as it's an engulfing candle compared to an inside bar, usually higher probability for me, right? So obviously tapped into demand, valid demand with the refinement. So we're meeting our criteria. We have structure, 30-minute breaker structure to the upside. We have a 30-minute protected low, lowest point in the leg before the new high. And with the failed breaker structure, that's a regular breaker structure, right? At the start. And remember what I said before. For us to have a complete order flow shift, because that's what was happening. We had a new low being put in here, and then there's a potential order flow shift, right? Because we're waiting for price to pull back and respect supply, and then continue down lower, right? Change of character, whatever you want to call it. But we're one step ahead because we know how to trade this sequence of price with the failed breaker structure. So it won't throw you off if you wait for the right confirmations. So it would have been a breaker structure to the downside over here, but because we're respecting original demand, that's when it becomes a failed breaker structure, because this doesn't come out a lot. Maybe 20-30% of the time I'll have a failed breaker structure entry model. So basically, because we respected this, that's when it comes in, and that's when we realize, that's when it becomes evident that all of this here is inducement, it's liquidity, it's barbecue chicken. That's what it is. Yummy, greasy barbecue chicken. So obviously all these retail trades get taken out here, however you want to look at it, right? And then we tap into here, second entry confirmation. That could be with a 1 second, 3 second, 5 second, 15 second, whatever you've collected data on, whatever works for you. Could be a rejection candle. could be your mum saying, buy now. I don't know what your confirmation is, but as long as price is respecting that demand and it's within the 30-minute breaker structure and the 30-minute protected low, that's why I say within the original structure, because this is the structure that we're trading from. We're trading from a demand zone that's below the 30-minute breaker structure and above the 30-minute protected low. That's where we're looking to trade from. And this is a type of continuation as well. It's a type of continuation. It could be a reversal because breaker structure to the downside. Okay, cool. I have a breaker structure to the downside. Let me wait for price to pull back into supply to head down lower. But it never comes, and then we get another breaker structure to the upside, right? So we get another breaker structure to the upside, and there's no entry for shorts. So what happens? All along, it was a continuation. Pretty much liquidity being generated, taken out, and giving us some form of continuation to continue the trend up. That's exactly what it was. So I used to get tripped up on this sequence of price a lot. I'm like, okay, I tried to go for a continuation off here because there was a protected low over here and I got taken out. Okay, must be a change of character. So what happened? I tried to trade the reversal and I ended up getting taken out as well. So I got taken out on my longs, on my shorts. Why am I getting spanked? Well, it's because it's the market fiddling with you and it's liquidity. But I was able to create an entry model based around it. That, you know, obviously it's not going to come most of the time. Most of the time I get my regular continuation model, but with this, a fail break structure, we're able to spot it and we're able to take advantage of it. So that's pretty much all it is. Have your structure marked out. Always mark out your structure. And obviously when price does this, mark out demand zones that meet your criteria. That's the thing. I mark out zones that meet my criteria. And if they don't meet my criteria, then I just leave it. But zones like these, I'll mark it out because there's inducement directly above it. There's potential here for a failed break structure. And I don't like to predict a failed break structure because most of the time it is just an order flow shift and we get a new low and then we respect supply and then we come back lower. But there's still opportunity here. That's what I'm trying to show you guys. So just wanted to come on here, give you the knowledge, uncut, nice and raw dogging it. Hopefully you guys enjoyed. Hopefully you guys learnt a little something from this example. And this is a 30-minute breaker structure as well. 30-minute failed breaker structure. So we have a 30-minute breaker structure, 30-minute failed breaker structure. It's not rocket science. Price is fractal. What happens on the lower time frame will replicate over to the high time frame. This is not exclusive to the 30-minute time frame or the 15-minute time frame. Could happen on the 4-hour, could happen on the daily, could happen on the 1 minute, 3 minute, whatever you look at, right? Price is fractal. What happens on the lower time frame will replicate over to the higher time frame. I'm sorry I'm speaking a little bit fast, but hopefully you guys are understanding. But there's different variations of a failed breaker structure. It doesn't have to be like this. I've taken failed breaker structures off in balance, off 30-minute zones, 15-minute zones, unrefined zones, off a protected low instead of a demand zone. So you can play around with this, but I just want you guys to understand the concept that this does happen from time to time in the market, and it's good to know how to deal with it. So if you know how to deal with it and it's in your toolkit, it's in your arsenal of weapons, happy days, right? I'm not saying that this is going to happen every single time in the market, but when it does happen, you know how to deal with it. It's an entry model you know how to deal with. You're not just going to be one-dimensional like, you know, Shaquille O'Neal. You're going to be stuck in the paint, can't shoot threes, you know, get clamped up and shit. So that's how I view it. Entry models for different situations, for different sequences of price. I hope you boys enjoyed this. Enjoy the rest of your day. Happy Easter. And love you all. Peace.